Welcome to 100 Units, Kelly Iannone from Waypoint Capital and investwithkelly.com. And I am excited to have her on the podcast talking about her journey in multifamily investing. Hi, Kelly.
Hey Joe, it's excited to be here.
I think we met at some meetups back in the day, and it was awesome seeing your growth in multifamily. And I wanted to get you on to talk about your journey and what you're heading to next.
That's awesome. Yeah, we met up when I was just getting started in real estate. So
Yes, very exciting. Do you mind giving a quick rundown on your transition and how things have gone so far?
yeah, so I was a longtime W-2 employee, 18 years, and the corporate America climbing the corporate ladder, realized it wasn't fulfilling to me and started diving down the path of financial independence and retiring early. And through that, I really found that real estate was for what I was looking for, the most optimal path. And so then we started exploring, I say we, my husband and I started exploring various different niches within real estate and landed that commercial real estate was where we really wanted to focus on because of the more long-term tenant base and the ability to really drive value because of the way that they're valued in the marketplace. And then that brought us to a point some 6 years later that I was able to retire from corporate America and now do real estate full time.
Wow, that's exciting. Something that most people do in 40 years. Did it in 6. Good job.
Thank you.
Okay,
I was starting from a good place, so
oh, okay, that's awesome. So is this part of your 4 steps to retirement in 20 years? They got
yes,
That's
yes.
that was one of your topics, and you wrote those 4 steps. What are the 4 steps?
The 4 steps are earn money,
Mhm.
save as much money, invest the money so it will multiply, and continue to reinvest until you can live off of the cash flow.
Pro
It's
level.
pretty straightforward, right? Like
No, that's a great. That works. That's awesome.
it really is, it's one of those things that I think people overcomplicate, especially when we don't have the financial literacy in the background. Money can be a very scary thing, and it's certainly a taboo topic in our society. And so that's one of the things that through my own journey, I was very fortunate to grow up in a household where we did talk about money. And I got to see my parents, they were very financially literate, but got to see how they interacted with money, how they thought about money, what money provided them, and subsequently me growing up, and the tools around like credit cards for one instance was a tool that I learned early on. And so that's one of the things I'm super passionate about, along with real estate, is just before you even start investing in real estate, really getting that financial literacy and financial foundation so that you have the ability to then really make such an impact for you and your family's lives.
What were some of the struggles or tips if you were going back and talking to you getting started again or somebody just getting started today? What are the tips you would give them?
Fear is a big thing, right? We as humans are naturally scared of the unknown. And so I think one of the biggest tips I like to give individuals when somebody calls me up and asks, how do you get started in real estate? How do I do what you're doing? Is starting to surround yourself with like-minded individuals. That is something that I credit a lot to where I am today and kind of what my path was. And that can be going to a physical meetup and literally surrounding yourself physically with people. It can also mean listening to podcasts and reading books on the subject matter that you're looking at focusing on or that you're exploring to see what might fit with your lifestyle goals. But surrounding yourself with like-minded individuals is going to be key so that you start to hear those conversations and you'll start to gain confidence because this topic will become normalized.
Of the people you talk to who asked you for that, which is I'm assuming you get that on a regular basis,
Mm-hmm.
where do you see them making the mistakes?
I'd say the biggest mistake is not actually going. The fear, I think people were scared of failing, we're scared of not trying, or we're scared of failing, which results in not trying. And in my, kind of the mindset that I've built over time and that I would encourage other people to build is that if you're not trying and failing, you're not trying hard enough. And that really pushing yourself to explore those other options and opportunities is really where the gold is. I mean, that's where that's where the wealth is made, is by pushing yourself beyond just what is right in front of us and what everybody else is doing. And so that's where going to these meetups, you can again put yourself in the same room with other people who are either doing it or want to do it. And you can learn from their experiences. You have thought partners that as you are potentially looking at a property and you've underwrote the property, that you want somebody else to take a look at it and poke holes in your underwriting. This is a community that you can then do that with, which helps with the confidence and pushing past the fear of that unknown.
I would say the typical thing I see all the time is people ask 100 questions, go to 50 meetups, talk to people, never make one offer on a building. It just befuddles my brain. I was like, what did you underwrite 50 buildings for if you weren't going to make any like? I don't get it.
That's so true. That's so true. And even like growing, I don't know, Joe, if we've talked about this in the past, but because you were there very early when my husband and we bought a 6-unit building that was in really bad condition. It shouldn't have even been occupied, but it was. And one of the things that gave us confidence was, one, we had been going to meetups and we had been reading books and listening to podcasts. We had also just completed doing a flip on a property that we went way over budget from a renovation perspective. And so when we looked at renovating a single family home for $100,000, and then we found the 6-unit apartment building that needed at least a $200,000 renovation, it turned into well, if we can do a single family for 100, surely we can do 6 units for a $200,000 renovation. So it was stepping up and progressing as well.
How much of that was mental confidence versus actual money?
Oh, yeah, I think you have to have the mental confidence and the fortitude to do it. One of my other thought processes that I have, and when I invested in my first real estate syndication back in 1819 as a passive investor, I sold all of my company stock, which was about 35,000 at the time, paid Uncle Sam 5,000 and took 30, what was remaining, the 30,000, and invested it passively into the syndication. And some of the conversations, there was a lot of fear around that because we're trusting these other people. We're trusting that this deal actually has enough meat on the bones to double the money over the period of time. And one of the conversations my husband and I had was, what is the worst that can happen? Like, what is worst case scenario? Worst case scenario is we lose that $30,000. And yeah, we don't want to lose the $30,000, but at the end of the day, it wasn't going to materially change our retire. Like, we wouldn't not be able to retire because of it, because there was still so much lead time that we had because we were getting started earlier. That thought process is part of what also let us jump into this 6-unit building, because not now, granted, we were talking a lot more. We were talking a lot more money going into that property, but we knew it needed everything. And we were surrounded by more individuals who were doing it. And we were very confident we had a good general contractor. And it did not all go perfect. So this sounds great, but it went over on time. It went over on budget. I was going to say double on budget, double on time, over on budget. But I mean, that's part of the process, right? That's part of growing and really learning. But yeah, that mental fortitude is super key. But then even having the financial ability, it really depends on how you're starting to get invested and where your role is, whether you're doing it individually or as part of a team, how much financial backing you need in order to do it.
Were you part of any of I'm trying to think of the Rod Cleef, Michael Blank, Joe Fear, all these, one of these groups? Mm-hmm. Which one I guess, were you and at that time, or are you now?
Yeah, I'm going to throw Jake and Gino out there as well, because no, I am not a part of any of them. but I have listened to their podcast. Jake and Gino, we're here in Orlando. Jake and Gino, they hold a conference here in Orlando annually. They all have mentorship programs. I did not join any mentorship program for the larger multifamily space or syndication space. I seriously considered it. I ended up networking and meeting an individual who had done several deals with different partners, and the timing was just perfect that he was looking at growing a team and putting together a team, and that was comprised of some other people he had done deals with. And then I just happened to, ping him at the right time. We jumped on a call. We ended up having dinner together, and it made sense that I could kind of step in on their team and help. And then just continuing to network. And so I still go to these conferences, the Jake and Gino, the Michael Blanc conference that's in Dallas. I still go to these conferences more from a networking perspective than getting the education, because so much of that education can be received through their podcast. But I think there's value in certainly doing the program or not. I have hired coaching since, but not necessarily for multifamily, but more for the capital raising side and focusing on that for real estate.
Okay. Interesting. I do have one of the things it has on your bio here is raising FIN kids. How to talk to
Raising
kids
Fin
about
Kids.
yes. What is Fin Kids?
Well, I thought I made it up, but the URL is not available, so I couldn't buy Finkins, but it would have been brilliant if I could have. So it's this notion that, like, again, I'm super passionate about helping people learn financial literacy and then setting themselves and their families up for financial success. And so this is just raising financially literate children. In our household, we talk about money fairly openly. Our kids get allowances, but they're not big allowances. They have to save half of their allowance, which my husband and I used to do as well. So they learn that way. But sometimes we go to Target and they want to buy something with their money and they don't have enough money. So we talk in very real terms. We'll give them the option to take a loan from the bank of mom and dad. And then we'll write a little IOU or a note that goes with their allowance jar, if you will, and we charge them interest as well. So we incorporate these very real conversations about money and taxes. Like there's sales tax when you buy stuff. These are conversations we have with our kids because we want to normalize the conversation about money, and we also want them to just inherently know how money works.
Wow, I'm impressed.
Yeah.
That is really I'm impressed.
Yeah. Last night, my kids are 7 and 8, and yesterday my son goes, "I want a Lambo." I'm like, "A what? A Lambo? Like a Lamborghini?" He goes, "Yeah." And I go, "Where do you know? Where are you hearing about this? You two kids." But so then we start talking about, well, what do you need to buy a Lambo? Money. Well, what do you need to get money? Okay, and then we talk about investing that money into assets, which then kick off cash flow, and that's what you use to buy your Lambo. So we're trying to connect the dots. Now, I don't know. When he's 20, he'll probably go blow all of his money, but we're trying.
You may be surprised. I have a feeling he'll do a good job. And where are you doing deals now? I know you've got a number of them out.
Yeah, so myself and the team that I'm a part of, we're looking at deals in Florida, Texas, and Georgia. And we're predominantly looking at value add multifamily deals. So deals that we can go in and obviously do heavy renovations, burn off loss to lease if we either have a high vacancy amount or delinquency. Those are deals. And we actually have a small project that we're closing on later this month that will have a development component to it. The property is on about 5 acres, 24 units on 2 of the 5 acres, and the other 3 acres we're zoned to build another 37 units. So we are JVing to buy the initial property, and then our intention is to do a syndication to build out the 37 developed units later this year or next year when the timing is appropriate. So, and that's here in Florida.
That's pretty exciting. You can get into development business, everything. Wow, exciting.
Who knows? I know nothing about development, but we'll figure it out. I know people who know things about development, and that's where those relationships and surrounding yourself with like-minded individuals is so important. So
And the focus of your business now is capital raising?
So I focus more on that, but I am involved in the asset management as well as acquisitions. So we operate, me and my team, we operate, there's 5 of us, and we each have our specialties, but we also overlap in our skill set. And that's important as we think about building out our business, as well as how do we fit in with other businesses. Because excuse me, a lot of the deals, we're not just buying our own team of 5, we will partner with other general partnership groups. So then it becomes an ebb and flow of what skill sets need to be filled in for or compensated for. And then we have the ability to do that. But my primary focus is a lot on investor relations, investor education, a lot like that, financial education, but investor education, and then raising capital for the deals that we're doing as a part of just ongoing asset management and looking at new deals with the partners as well.
So the vast majority of your focus on the capital is on passive investors looking to invest in syndicated deals. That's your focus.
That is a big part of my focus, yes.
Okay.
Yeah, so you'll see me predominantly on LinkedIn and just having new conversations with people and educating on the benefits, understanding individuals' own financial goals to see if it aligns, because passively investing in real estate is not for everybody. It's for a certain type of investor. So really having the financial responsibility to understand what a potential investor's goals are and seeing if it aligns with the type of opportunities that we do.
It's important.
Yeah.
And I think a lot of people skip
that's
that step, and it's a mistake.
Yeah, and I think for people that are interested in getting into these bigger deals, I think I knew very early on that this is where I wanted to spend a lot of my time. I consider myself a people person. I like to talk to people. I'm not afraid to just pick up the phone and talk to people, or go to conferences and network, or have tough conversations. It's something that comes a little bit more it's more natural for me and more easy work. And so that's where, when you're starting to look at what you want to do when you get into this business or grow it, is really understanding what your strong suits are. If you're really strong in project management and processes, then potentially raising capital isn't going to be the best fit for you, but it's going to be more on putting together the business plan and managing the CapEx as we go through the initial couple of years of a particular project. Same thing with if you're really, really strong in finance. Now, I have a financial background as well, doing forecasting and planning. So I have a big financial background as well. But if you're really into the numbers and can really poke holes and understand the ebbs and flows of when you change a cap rate or an interest rate, how does it flow through the model, and kind of be able to walk through all of that, then underwriting might be a strong suit for you to play in. Now, I will say that in this business, everybody is raising capital, because raising capital is not a singular discipline. You can't be compensated for raising capital. So inadvertently, everybody is raising capital, but we do specialize in different disciplines within the broader business.
So is that each one of your 5, the people in your group? Sorry. Okay. And right now, you said you're looking in, the swath of the Sun Belt, basically. And
yeah.
When you're looking at, I assume you're underwriting deals on, there's got to be, I don't know, hundreds of them out there that you're currently underwriting.
Yes, we are continuously underwriting, and we do quick underwriting initially, and then if it starts to look appealing, then we'll do more in-depth underwriting.
And so do you run like your own proprietary models, or is it like you have some?
We use the Michael Blanc syndicated deal analyzer is the calculator that we use, and you can get it from his website. It is not, it's not great when we're talking about waterfalls. So it's good just to do an easy 70-30 split, meaning the LP gets 70% of ownership, the general partnership gets 30% of ownership. You can change those numbers, but it does not have built in where you can do a waterfall. So as you hit hurdles of returns, it changes what that split is. So in different models, there's going to be pros and cons. We have added, same thing with when we're doing renovations and rent bumps on renovations. That's something that wasn't as intuitively built in there. So we've layered like an extra tab onto it or sheet onto it to kind of account for that as we adjust it. But the foundation of the model that we use is the Michael Blanc syndicated deal analyzer tool.
Okay. And all those, I mean, I'm doing all right to like be reasonably knowledgeable of like central-ish North Florida, and y'all are underwriting deals in multiple Sunbelt MSAs. Like, who is checking those deals out and like doing the underwriting, going and checking out the market, making sure rent comps make sense, sales comps? Is that you, or?
It's a team sport. It's a team sport. So we subscribe to data platforms. So one of the ones that we use is Yardi Matrix. So that's one place we can go to get more complete data in order to put together what an underwriting portfolio may look like. If we get a deal that we're going to make a offer on, submit a letter of intent, one of our partners who is actually based in Atlanta, he will usually fly to wherever the property is to walk the property. I mentioned earlier too that we do partner up with other GP groups. So that is something that we'll take their underwriting, we'll do our own underwriting, we'll make sure we're aligning on all the pieces. And then from a rent comp perspective, it's really looking at the market, making calls to understand, are we in the realm of what the projections are, as well as talking to different property managers to validate that assumption as well. So depending on how we're finding the deal. So if it's an off-market deal, or if it's a deal that a broker has that they're just not putting on the market, they want to sell it off market, there's more work if we're getting that directly that we're going to need to do to make sure it makes sense. But we also have a lot more access to information because we're working directly with the broker who's working directly with the seller. But if another GP group is coming to us with a deal that they may already have under contract and they just need additional support on it, one of our deals we got in Dallas, Texas, the team that got the contract under the property under contract were big in the fix and flip space there, and they had never done a large apartment complex, and they got a 127 unit complex under contract for a really good deal. But then once they got it under contract, they weren't real certain what to do with it. They knew it was a good deal and they needed to lock it up, but then they had to figure out what to do with it. And fortunately, one of my partners had been networking, and so we got brought in as a partnership team on that one. And because my partner has a lot more experience and a couple of the partners on going full cycle on some of these deals, we were able to step in and basically be 50-50 on this deal with that general partnership team and walk them through, here's the SEC attorney that you can work with. Here's the type of documents that we're going to need. We're going to need to do K-1 tax documents every year. We're going to blue sky filing, like all the different things you have to do as part of a syndication. We were able to help partner up. So that was a value add that we provided in that deal, along with bringing additional capital.
That's interesting. And so in this, I assume you sent in tons of offers as syndication. That's one of the things I honestly have a hard time when I'm reviewing it and also talking to sellers, is actually qualifying the ability of the syndication group or syndicators to actually close. Because they all say, oh yeah, we can close, we're going to rate. So I've come down to just like saying, look, how much hard money are you going to put up? Because I don't know how to quantify they're all very confident.
Mm-hmm.
And I don't know if you have some insights having lived on the other side of the table, like because I'm looking for a good answer on that situation.
Yeah. I think the best answer is their historic, what have they done in the last 6 to 12 months? I think that would be my question, is what have you closed in the last 6 to 12 months? Like, are you closing on deals, and are you the lead GP on the deal? Are you like, what's your role within it? That would be my biggest question, because there's a lot of in the last 6, 12, 24 months, it seems like the conversation about doing syndications has really expanded, and the amount of groups that are growing. And granted, I transitioned into this during this period of time as well, so I'm a part of that. Again, I teamed up with folks who had gone full cycle on some deals, so I was able to kind of piggyback on their experience and then learn from them as well as learn by doing. But understanding that they've actually closed deals in the last 6 to 12 months would be my key thing to look for when trying to understand the validity and the surety of close, because surety of close is huge when you're talking about these large properties, especially in this environment where things are changing so quickly. Knowing that you can get the property under contract and then close on it is so important. So I think that would be the big thing that I'd be looking at. Hard money is certainly good too. Hard escrow.
In y'all's, yeah, in your space, and you're making offers, how many of them are coming back and saying, hey, we need to see hard money? Like, I want to know you're putting your money where your mouth is.
Yeah, so it's a lot more conversation about pricing right now, because there's still a disconnect between what financially the numbers make sense in order to get the returns our investors need to invest in deals, and what sellers are still looking to get out of the deals, because it's, there's a lot of sentiment that they want to get what they could get last year, and the market has changed significantly with the interest rates, which has of course impacted the cap rates and so on. There is less and less conversation about hard escrow money now, right upon putting going under contract. So it was, a year ago, as it was as soon as you went under contract, your money was hard. And so now it's more of a conversation of once you get through due diligence, then it goes hard. So it's softened up, at least from what we're seeing when we're talking about deals, and it's more of a negotiation point.
And so I guess when y'all were putting hard, so y'all are not putting hard money today. Like, you're not even being asked for it. That's okay. Interesting.
And until we get through the due diligence period is when we're seeing.
Is when you're seeing to put, okay. And how does that go internally when you're, as a syndicator, when they're coming back to you and say, yeah, look, we're happy to go to contract with you. We'll sign this, we're agreeing it, but we want to put, we want to see some money up front. How does that go internally?
The general partnership team, we put up the money. So we pool our money to put up for the deposit, the earnest money deposit. The general partnership team is also who's paying for all the due diligence that gets taken care of while you're under contract. Investor capital, unless they're part of the general partnership team and they're very clear this is what your capital is being used for and whether or not it is hard or not, then investor capital doesn't really get put into play until you close on the property and you actually purchase the property. Up until then, their money just sits in an escrow account. So it's the general partnership team that's pulling that money out there. Now, something interesting that I just learned that you may or may not know, Joe, is I had a call last week with a team. There's a new company. They've only been out 6 to 9 months. So very early, I don't know track record so much, that puts up deposits for you while they're non-refundable. While they're refundable. So they will not put up any deposits past its hard date, but it's basically you're buying an option for the contract. And they're
interesting. And how much do they charge for that?
It's about 8.5% plus 2,500 for the legal fees, and their minimum is 100,000 escrow. They call it EMO, escrow money option. And we haven't used them yet, but I'm like, that's an interesting, 30, 60, or 90 days is like the length of the term, but it's minimum $100,000. And it's got to be fully refundable.
And they put up your escrow for you and charge you,
yes,
whatever, 8% interest on it, as long as it's refundable. And then when it becomes non-refundable, then you have to pay.
They cancel the contract. We either pay it back. We either pay it to them and we buy that option for that contract, or they cancel the contract.
Interesting.
And so they'll set it up as a Delaware LLC that us as the general partners would have temporary signing rights, so that we as the general partners could still sign the purchase and sale agreement But yes, if basically when the option is due, when that non-refund, when that deposit would go hard, and if it's not paid, then they'll cancel the contract.
That is, I have never heard that before. I see. I learned. Yeah. Wow. Thanks.
You're welcome.
That was really good.
There's always new things. And here, this is good, I think, for your audience or whoever's listening. Like, I might sound like I really know what I'm doing. And I like to think that I do really know what I'm doing at this point. But this is really in the last 18 months that all of this knowledge has came in from me. Like, I did real estate before that on the single family, flipping partners, flipping partners, flipping a property, and then passively investing in a syndication. But being active as a general partner in a syndication and really understanding the inner workings of this all has really came in the last 18 months. So you're talking to somebody that went from not being active or really having very little knowledge of it to now somebody who has a lot more knowledge of it. There's a lot more I can learn, but has a lot more knowledge of it and has had the ability to walk away from my W-2 job and be able to focus on this.
So what? So that's a good segue. So what is next? What are your goals here for the next 12 to 60 months?
Continue to focus on this. So my team and I were actually in the process of setting up a fund, which is again a whole new thing that I'm learning. So we're in the process right now of setting up that fund, which we will use to continue to acquire additional assets. And I think that is something that will put somebody like you as a broker have some peace of mind, because ideally we can raise capital before we even identify a deal, so that when we're making an offer on a property, we can go, we've got $1 million or $2 million already sitting in our fund waiting to be placed with a particular property. But that would be for our accredited investors only, and then we'll continue to do deal specific outside of the fund structure for our non-accredited investors. But our focus is, I think there's going to be a lot of great properties in the really in 2023 and early 2024, as we do see some property owners getting pinched by the rising interest rates. So looking at just opportunities to acquire new assets, hopefully some assumable debt that we might be able to get that have really attractive, and then also looking at creative financing with seller financing on some properties that we've been in discussions with.
That's super. I mean, a decent sized deal, seller financing, like legit. Because this is something just so you like. I could not count the number of people call me up and tell me that, and every single time I ask them the same thing: what deal? I want to see the address. Tell me where it is.
The one that we are buying.
My buddy did one. It was 200 units and he got seller finance. I'm like, man, first of all, congrats to your buddy. What's the address? And then every time they're like, oh, well, like it's like the mysterious Sasquatch. Everybody heard of it. And, like I'm not trying to be, I just like, where? Like, show this to me.
Yeah, it's not 200 units. The property that we are buying that has the 24 units and then room for development, we are seller financing that one. And so they're carrying a note of about 2.4 million, I think what the note ends up being. We're bringing like 1.4 to buy it. So it's a low loan to value, because it's not obviously considering the development piece.
Yeah.
But that's a decent sized property. It's not 200 units by any means.
Okay.
Now we do have another.
I sold a 24 unit over in Avon Park that was seller financing. So it's not like I don't know that that's a thing. It just, they call me up like they're 200 units, or like, I want to know the address. Like,
yeah.
I want to pull it up on public record and see this.
Yeah.
I mean, I'm sure it has happened. I'm confident. But every time I ask specifically, everyone starts stammering and every other. Anyway, that kind of thing drives me nuts. I could not count the number of things where my group has bought this building in Orlando. I'm like, oh, which one? Oh, I said, which one? I know them.
Which one? You know them all.
I know them. So I want to know the address. I want to know the name. I want to, like, come on. So that's your next goals for going forward. You're doing more of this, heading into raising a fund.
Yep, more of this and raising a fund, and then you got to have big, hairy audacious dreams. And so one of my big, hairy, audacious dreams is to buy a sailboat, a catamaran, and sail around the world. So that's a little bit down the road, but that's one of my big goals. And I can still have conversations with people with Starlink around the world. So we'll see. So keep an eye out for that.
Catamaran, that is exciting. Good job. I'm excited for you. All right. How
We're
do people
working
get
on
a
it.
hold of you?
Best way to get a hold of me. So I'm always happy to be a thought partner. And if you're interested in getting into real estate and you're not sure how to get started, or you do get started and you realize it's a lot of work, because it is, feel free to reach out to me. Best way to get a hold of me is investwithkelly.com. And I actually have a great resource on my website. It's a financial freedom playbook, your guide to successful apartment investing. So feel free to check that out as well.
Awesome. Thanks, Kelly. It was awesome.
Great to see you, Joe.
Okay, you too. Have a great one. Bye.